Good morning. Paul Georgie from Allendale. It's November 11th, Monday morning, Veterans Day, and we first of all want to thank all the veterans and U.S. troops that protect us on a daily basis, and we certainly appreciate what they do. In the markets, the grain market is giving us a little bit of a bounce here in corn and wheat. Soybeans under some slight pressure. This morning it appears like most of the action is being based on spreading, where the trade is buying the corn and wheat, selling soybeans. Some of the news or the after effect of the USDA report last Friday at 11 o'clock, the trade's looking at the soybean crush number, thinking that it could even be higher than what the USDA put in their report last week, which would actually make ending stocks even tighter. That's giving some of the strength of the soybean complex. The other factor I think that needs to be watched and will be talked about for several days is the prevent planting acreage number that U.S. used on all the crops over 8 million acres. So it's a significant number there. The harvested progress number that normally would come out on Monday will not be out this afternoon. It'll be tomorrow because of the holiday and federal holiday in Washington. So trade, however, is looking for about an 82 to 85% completion on corn, soybeans at the 90 to 92% rate. We've got South American weather seems to be favorable for the start of their growing season. The forecast looks favorable with some rain in areas that needs it. So their crops getting off to a pretty good start with the planting progress in Argentina now about 50% complete. We also got the CFTC's numbers on Friday from the Commitment of Traders, and it shows that managed money now is about 179,000 short in the corn, about 98,000 long in soybeans, and about 20,000 short in wheat. And since the last report, the wheat number was the biggest change. They went from long about 15,000 to short 20,000. So very big turnaround there in the managed money's position in the wheat complex. In the cash market, we're seeing some weakness in the basis as farmers sell on this rally that we've seen on Friday. We also had a good harvest weekend, causing basis to come under a little bit of pressure. We'll be watching that very closely. CIF basis pretty much steady. There still is demand for getting the corn and soybeans that are sold, getting that shipped out of the Gulf. In the livestock market, cutout values there in the beef down. Choice was down 120, select down 43. Hog cutout values were up 79 cents on Friday, and I think that should give us probably a steady opening in the pork complex with maybe a steady lower market in the cattle as they struggle with this cutout value, and the profitability at the packer level is still a real battle. And the packers bought a few cattle last week at 131. It looks like they will try to need to buy cattle at steady money this week, but it appears they're pulling in some contract cattle to fill their immediate needs. The problem on the beef side and the meat side for both pork and beef is that we're approaching Thanksgiving. That's a time where retailers will change their featuring at their retail counters. Turkey takes the spotlight, which removes and creates some competition for the pork and beef. So some interesting things going forward here. Reason to stay in touch with Allendale's research. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.